This is H1 time frame of gold. Since price is making higher high, higher low on this time frame, so you can see price is bullish and 1680 is our bottom on this time frame. Until price make lower low, lower high below 1755, you cannot say bearish. So 1755 is our first key horizontal support. Based on Elliott wave counting, the fifth wave is making a ending diagonal chart pattern, and right now we are in final wave E, which can retest upper trend line, but for a sell entry you have to wait for breakout of lower trend line. Then you can take entry on retest with target up to 1755. For bullish you can take entry, but your support is this lower yellow trend line. This is your dynamic support, and this line has been tested 3 times. So if you take entry, your SL should be this trend line. After this 5 impulsive wave, price can make correction which can be sideways or sharp retracement. So if you buy, so downside risk for you up to 1755 is increasing. Better you wait for retracement. On last week on CPI number, first price goes up, then came down. So all of the speculators who are buying for first drop in CPI, they now have their official confirmation. Before next FOMC meeting, if CPI drops one more, then you can say inflation has peaked. To get upside resistance above 1800, when you go to H4 time frame, you can see upper trend line of this channel has been broken, and last wave of this trend has made 61% retracement. On this H4 time frame, price is making a sideways correction near this 61% retracement level, and this is above this horizontal support level. So either price makes sideways correction or retracement back up to 1755, but next upside target is 1875, which is our key strong horizontal resistance level, and this is 50% retracement of this complete trend. Since CPI number came down last week, so this confirms that deflation has been started, and this complete trend from top to bottom was Fed QT, the rate hike cycle, and next policy will be QE, the interest rate cut, money printing, but this will happen very slow. Now they will decrease the size of rate hike, and after this CPI, the next big thing is Jackson Hole meeting, and if Fed gives signal for QE, then this is your bottom 1680, and price will not stop until it goes back to 1875. After that level, it can continue its bearish trend or bullish trend reversal has been started, because after CPI number, FOMC member now see risk of recession, and if we get confirmation for Fed pivot in Jackson Hole meeting, so these buyer can take profit. To get more information about support and resistance, when we go to daily time frame, then our support 1680 has been tested, and price is back about 1721 and 1753 support. For a downside correction, 1753 is only big support. And right now on daily time frame, price is making a sideways correction inside this resistance zone from 1805 to 1784. If new high comes, it break upside, then next target will be upper resistance zone from 1868 to 1960. So before price go back to that resistance zone, it need a correction, and this can come before Jackson Hole meeting or after official confirmation what Fed say in that meeting. Before FOMC, we have one more CPI number and NFP, and both will confirm that deflation has been started or not, because deflation can kill all this inflation. And if we go to weekly time frame, then you can see in 4 weekly candle price is back to 1800, and when it was testing 1680, everyone was saying they were manipulated by trading psychology that price will go 1400, 1300, but after correction it can easily go to 14 or 1500. But it is only possible if Fed ignore everything and go aggressive rate hike, because now FOMC member are giving signal for stagflation, and this is multi-year trend. First they hike, then cut, then hike again, then cut interest rate until inflation go back to 2%, and they want to reduce this time as shorter as possible, because if they go from QT to QE, then inflation can come back, and Ray Dalio is still saying risk of stagflation. So these seller may be waiting for retracement and Fed signal for next rate hike cycle, and in between they are saying hiking, then waiting for inflation reaction. They are not saying for rate cut, but they are saying they will stay with interest rate at this level, because in QE if inflation comes back, then in that condition it can go higher than 10%. So this is multi-year trend, and everyone will wait for carefully how price will react this resistance zone and Fed plan for stagflation, because it cannot go to 2% in one shot. So on weekly time frame, our resistance zone 1784 to 1805 has been filled by last weekly candle, and upcoming weekly candle will decide where price will go. If candle close outside this box, then next target will be upper resistance zone, or if we go to H1 time frame, then it can retrace back up to 1755. In fxstreet economic calendar this week, the big news is FOMC minute. Then after this report, everything will be focused on Jackson Hole meeting, and this will decide gold price for upcoming month up to September FOMC meeting. For downside retracement, these are your support on H1 time frame. If new high comes and if make a new higher high, then your resistance will be based on weekly time frame. Right now you have this chart pattern, a ascending trend line tested 3 times.